there are really a couple of very important trends that are unfolding over the next few years. If you look at high net worth, if you look at changes in demographics, for example, those are creating a lot of changes in the asset management industry. PwC just came out with a report that says that they expect the industry to grow to 145 trillion in assets from about 85 trillion today by 2025. The growth in high net worth individual, the growth in a lot of new consumers in emerging markets, in China, for example, a lot of them in Asia, who have now accumulated enough wealth to actually invest in savings products is one of the big trends. The other trend, of course, is the changes that we are seeing from a demographic basis. We see a very rapid aging of population. So if you look at the older population, 65 and over, we will see a doubling of that population between now and 2050 to 1.3 billion people. So that's very, very large and very rapid. Now, of course, this will be the first time we have an older population that is larger than the young population. So the kind of products that are needed from that population is very different. The second major trend in that client demand aspect is millennials. So millennials are the vast generational trend that we are seeing, huge assets that are being transferred, very large part of the working population, and 58% of the millennials are actually based in Asia. Those millennials want things differently. They all want things online, they all want things digitally, they want to invest in companies they think are doing the right things, they want to work for companies who are doing the right things. They're also very team-oriented. Factors such as technology and climate change, those are very important ones. So if I go for technology, what you have is a very important trend of cheap computer power meeting artificial intelligence. You are going to see an increased impact of technology onto the rest of the world, and that is really important on how we invest. It can be finance, it can be tech, it can be consumer. Every sector is affected. The other important trend is climate change, and climate change is a disruptor. Clearly, artificial intelligence and technology is going to help us combat climate change, but it's very likely that we'll go through the 2-degree increase, beyond which the impact of climate change on population, on the way we're going to look at energy efficiency, on the way we're going to look at managing risk across the planet. For us as investors, this is a big area where we can make a difference. One asset class that is not included in many portfolios is alternatives. And when you look at the need for savings and infrastructure investment, particularly in light of climate change and growing consumer demand, this is a very large area. And here, based in Asia, we're seeing a fantastic opportunity, not only in private equity, in alternatives, but also in infrastructure. The other area is multi-asset. So investors want a return. They don't mind if it comes from fixed income or equities, but high net worth individuals in particular just want a solution. And multi-asset, including alternatives, is something that is going to be extremely important to focus on. Of course, the traditional asset classes, best in class in equities and fixed income, are also going to be very important, but I think we have to reframe them within the multi-asset frameworks that I've talked about. For us as investors, it's about finding companies that have a profile of sustainability, that are investing and managing not only their activity but their business and their employees with a long-term approach and a long-term success. And that is very, very important to us. So both from an investment side and a client side, I think this is absolutely. We have a very, very supportive environment for risk markets. We have low growth, low inflation, low interest rates. So all of this is really pushing people to come and take their cash and savings and put it into risky markets. On the other end, is inflation going to rise? Are central banks going to take back all this liquidity and at what speed? And then finally, are geopolitics getting in the way of economics? And we've seen a lot of volatility around this. Overall, we think that this synchronized growth that we are now seeing is going to continue to be supportive. I call it global synchronization.